Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets hidden in plain sight within corporate filings. Today, we're diving into a document that is all about gathering your votes, and let me tell you, there is more going on than just a friendly invitation to a shareholder meeting. So Generation Income Properties Incorporated is preparing for its 2025 annual meeting of stockholders. This is basically where major decisions get made, and the company leadership gets a nod from its owners, the shareholders. It is happening in December of 2025, and they're asking for your vote. The big items on the agenda are electing 6 directors to keep an eye on things for the next year. Think of them as the company's guardians, making sure it stays on the right track. They're also asking you to approve who will be auditing their books for 2025. This is pretty standard stuff for an annual meeting. Now, who gets to call the shots? Well, if you own stock on the 22nd of October 2025, you are on the list, and your vote is super important whether you show up in person or mail in your proxy. They're making it easy for you to get the information. All the important documents, including this proxy statement and last year's annual report, are online and ready for you to check out. Let's talk about what the company is trying to achieve with this meeting. It boils down to 2 main things: getting their board members approved and confirming their accounting firm for the year. This is where shareholders have a real say. Remember that record date we talked about, the 22nd of October 2025. That is the key date to be a shareholder and have your say. They've got about 5.4 million shares out there, and each one gets a vote. To actually get anything done at the meeting, they need a certain number of shareholders or their votes. To be present, this is called a quorum, and they need at least half of the voting power to show up. Now, let's look at who they want to put in charge as directors. They've nominated 7 people, but they're planning to elect 6. This is a bit of a puzzle. They're already saying the board has 5 directors, and they want to add 1 more, bringing the total to 6. So why 7 nominees for 6 spots? This could mean a change is coming, or one of them might not be able to make it. First up, we have Benjamin Adams. He's been on the board since 2019 and has a background in real estate investment firms. He's also worked with some big names in real estate advice. Then there is Jenna Chung, who joined in 2021. She brings a lot of experience in raising capital for real estate investments and has worked with major players like USAA Real Estate Company. Stuart Eisenberg is another board member appointed in 2020. He is a former partner at BDO USA with a lot of experience in real estate investment trusts and public offerings. He is their go-to guy for financial expertise. Betsy Peck isn't given a detailed bio here, which is a little unusual for a director nominee. We have to assume she has the necessary qualifications. Patrick Quilty, a board member since 2019, has a strong background in credit risk management and has held senior positions at major financial institutions like Barclays Capital. Richard Russell is another interesting character. He was actually the CFO of this company not too long ago, from 2019 to 2022. Now he is the CFO of LM Funding America Incorporated, a Bitcoin and digital asset company. He's also served on several other boards. And finally, David Sobelman, who is pretty much the main man here. He is the chairman, CEO, president, and secretary. He founded the company and has a deep understanding of the net lease real estate market. He's also written a book on the subject. Looking at the diversity of this board, it is a bit of a mixed bag. Out of 6 total directors, they list 1 female director and 4 male directors. There are also some demographic details, with 1 director identifying as white and 1 Asian director. It is good they're thinking about diversity, but there is definitely room for improvement. Now let's talk about independence. Stock exchanges like NASDAQ require a certain number of directors to be independent. This means they shouldn't have a direct financial tie to the company beyond their directors' pay. The company states that most of their directors are independent, which is a good sign for good governance. How do they pay their directors? Well, not with cash, at least not directly. It is all in stock awards, which generally vest over time. This is a common way to align the directors' interests with those of the shareholders. They've also been granting restricted stock units, which is another form of equity compensation. In 2024, none of the directors earned any cash fees. Their compensation was purely in the form of stock awards, totaling around $50,000 for each independent director. This is a pretty standard structure for director compensation, tying their pay to the company's performance. Moving on, let's look at some interesting transactions with related parties. There was a redemption agreement with Thomas E. Robinson, which involved issuing shares and recording some debt. It seems like they used this to settle some obligations. They also took out a loan from Brown Family Enterprises LLC, a related party, for $1.5 million. This loan has been amended and restated, increasing the amount to $5.5 million and extending the maturity date. They paid quite a bit in interest, around $495,000 in 2024. And here is a big one. They took out a loan of $610,000 from their own CEO David Sobelman to cover closing costs for selling some properties. The loan was due pretty quickly by August 2025 with an interest rate of 5.75%. This kind of transaction can raise eyebrows because it involves the CEO lending money to the company. They also paid nearly $400,000 in fees to their CEO for personal guarantees on company debt in 2024. While these guarantees can be necessary, the size of these fees warrants attention. Let's look at how the company is run. David Sobelman, the CEO we just mentioned, is also the chairman of the board. This dual role isn't uncommon, but it does concentrate a lot of power. They say they believe this structure is efficient given his history and significant ownership in the company. They do have a lead independent director, Benjamin Adams, who acts as a liaison between the independent directors and the chairman, and presides over executive sessions of non-management directors. The board is very aware of the risks involved in running their business. They have a pretty formal approach to managing these risks, with regular reports coming from senior management on all sorts of potential dangers. They also have agreements in place to protect their directors and officers, basically promising to cover them if they get into legal trouble because of their work with the company. This is a standard practice to attract and retain talent. The audit committee, made up of Stuart Eisenberg, Patrick Quilty, and Gina Cheng, plays a key role in overseeing the company's financial reporting and auditors. Stuart Eisenberg is noted as an audit committee financial expert, which is important for guiding the company's financial health. The compensation committee, led by Benjamin Adams and including Jenna Chung and Patrick Quilty, handles executive pay. They review and approve compensation strategies and plans for the top brass. And the nominating and corporate governance committee, with Patrick Quilty at the helm and Gina Cheng and Stuart Eisenberg as members, focuses on finding and evaluating new directors, as well as overseeing the company's overall governance. Now for Proposal 2, ratifying the appointment of Conresnick LLP as their independent auditor for 2025. It is worth noting they recently parted ways with their previous auditor, Alone Bailey LLP, back in July of 2024. They say there were no major disagreements. Let's look at the auditor's fees for 2024. The total fees paid to Conresnick and Lone Bailey combined were about $433,000. That is down a bit from nearly $474,000 in 2023. The bulk of that is for audit services, which makes sense. The audit committee has reviewed the financial statements, discussed them with management and the auditors, and is recommending to the board that they be included in the company's annual report. This is basically their stamp of approval on the financial reporting. Let's talk about the executive team outside of Mr. Sobelman. Ron Cook joined in 2024 as the Principal Financial and Accounting Officer. He's got a solid background in finance and accounting, including work with real estate firms and even starting at Conresnick, the company's current auditor. Here is some juicy detail on executive compensation, specifically for David Sobelman. His employment agreement was significantly amended in August 2024. His base salary starts at $200,000, but can increase substantially as the company's asset value grows, potentially reaching $600,000. He also gets a guaranteed bonus and a performance bonus, which could be quite substantial. In 2024, David Sobelman's salary was $200,000. He also received a bonus of $70,000 and stock awards valued at about $36,000. The all other compensation is a big number, over $412,000. This includes health insurance premiums and those guarantee fees we talked about earlier. Ron Cook, who joined in 2024, had a much smaller salary in 2023, only $26,000, because he was likely providing services on a contract basis before becoming a full-time employee. Finally, let's look at who actually owns the most stock. We have the John Robert Sierra Sear Revocable Family Trust with over 4% and Thomas E. Robinson. With almost 4% then, when you look at the executive officers and directors as a group, they collectively own about 6.2% of the company. David Sobelman himself holds around 3.6%. It seems like ownership is pretty spread out. For any shareholders thinking about submitting their own proposals for next year's meeting, there are strict deadlines and rules to follow. Basically, they need to get their proposals in well before the company prints its proxy materials. And a quick note on how these documents get to you. Some banks and brokers might only send one copy of these materials to households with multiple shareholders. If you need separate copies, you just need to ask them or the company. So, what is the big story here? Generation Income Properties Incorporated is going through a bit of a transition. They're looking to expand their board, making some strategic moves. The compensation for executives, especially David Sobelman, is tied heavily to the company's growth, which is a good sign for alignment. However, the related party transactions, particularly the loans from and to the CEO, do warrant a closer look from a financial perspective. The shift in auditors and the overall fee structure makes sense. While the director compensation focuses on stock, the large guarantee fees paid to the CEO do add up. The ownership is fairly distributed, but it would be interesting to see if the executive team's stake grows as the company expands overall. Generation Income Properties appears to be navigating growth with a clear incentive structure for its leadership. The key will be how effectively they manage their risks and leverage their growth strategy to truly deliver value to shareholders. They're asking for your trust and your vote, and it looks like they're laying out their plans. But shareholders will want to keep a close eye on those executive compensation and related party loan details. Alright, that is our deep dive into Generation Income Properties' proxy statement. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.